government-sponsored insurances. Social Security is a government-sponsored insurance for retirement and disability. 90% of all employed people pay into Social Security. Not every single person pays into Social Security. For example, teachers in California do not pay into Social Security because the California teacher's pension is so good that they don't need Social Security, so they don't pay into it, so they don't get it. So if you're a full-time teacher in California and retire as a full-time teacher in California, you're not eligible for Social Security because you've got your California teacher's pension. And then there are other, I don't know who all doesn't pay in, but there are other situations similar to that you're not paying into it. It was begun in 1935 by Roosevelt, FDR, not Teddy. And it was part of his Reconstruction to try to, bring us out of the Depression and things. And it was retirement or death benefits. So like if you die, your family gets your benefit. And then, or if you're under retirement age, disability if you cannot work. The amount that you get depends on the amount that you've paid in. So if you only pay into Social Security for 2 years, you're certainly not going to get as much as if you paid in for 60 years or 50 years. Okay. The act that enacted Social Security was the Federal Insurance Contribution Act. And this is what established Social Security. Before this, there was no retirement benefits unless you yourself had a retirement account. So you were completely 100% responsible. Even with Social Security, the average Social Security payment that a person receives once they're retired is not enough to live off of. I don't know if you guys are aware of that. It's like $600 a month. Something, Social Security payments, it's not a lot. You can't live off of it. Yeah, if most people that if they didn't have any sort of backup, they're still working.
You're allowed to work a certain amount of hours.
Yeah, but so don't count on this.
Or a lot of people who have Social Security, their spouse or someone works.
Right.
So they were able to.
Yeah, I'm just saying don't count on Social Security as your retirement plan. It's not your retirement plan. Come up with another retirement plan in addition to Social Security, okay? Social Security can be your, oh, look I can go shopping and have your real retirement plan, okay? FICA is the Federal Insurance Contribution Act, and FICA taxes cover both Social Security and Medicare. It's split evenly between you and your employer, so if you look on your pay stub and like $100 came out for Social Security from your check, then your employer also paid in $100. So it's even. The Social Security tax is based on a percentage. The current percentage is 6.2%, and it has been 6.2% for several years. I don't know when they'll change it, but eventually it'll change again. And it's up to $117,000. So if you make $150,000 in income, only $117,000 of it will be taxed, Social Security tax. The remaining 34 would not be taxed. And then Medicare is based on a percentage, but there is no maximum. So if you make $2 billion next year, they're going to take a percentage of all of the whole $2 billion. I don't know of anybody that makes $2 billion a year, but if they do, they're paying Medicare. And that is currently 1.45%. And this is of the gross income. Off of your income before any other taxes come out. Now, there are some things that are tax exempt. So like before your income taxes, and we'll talk about this in the next chapter when we get into income taxes, But before your income taxes are calculated, they'll take out your health insurance and certain other, retirement contributions and things that don't get taxed. But Social Security and Medicare are off of your gross income. So those things don't get deducted before they calculate them.
For Medicare, if you're not on Medicare, do you still get taxed for it?
Yeah, no, this is your tax for when you do become on Medicare when you're old. Yeah, this is like you're prepaying for what you'll get later. If that makes sense. Yeah, so everybody pays Medicare, everybody pays Social Security. Even if you never go on it.
I know about Social Security.
Yeah, we already talked about this. Your maximum taxable income is the maximum income that gets taxed. Okay, and this is Social Security only. And then the max is $117,000. So federal income tax doesn't have a max. Medicare doesn't have a max. The only thing that has a max is Social Security. Your Social Security number is your unique identifier. Okay, it is 3 digits and then 2 digits and then 9 digits. It's of this. This first set of numbers here tells, I want to say what area you were born in. No, it's either what area or what decade. I think it's the area.
That makes so much sense because people that I know in my family that have gone to Puerto Rico, it starts with 2 of the 6 digits.
Yeah. So I think this is your area because if I'm not mistaken, it is required for legal employment. And you must have it to file your taxes and, of course, to get any kind of Social Security benefits. Pretty much your income has changed. This year it's $117,000, and 96 it was $94,200. And Medicare tax was $1.45. He earned $73,210. How much did he pay for his taxes? So we do .062 for Social Security. And he's below the maximum, so it's going to be on all of his income. And .0145 for Medicare. Right? I mean, his first job must have been like a lawyer or a doctor or something. Okay, so here's how much he pays for Social Security. This is how much he pays for Medicare.
She says they don't have my FCAP score, but they do have it on file that I took.
Social Security and Medicare taxes, you don't get those back in a tax return. This money is gone until you retire or get disabled or till you die, in which case your family gets it, not you. But until it's like down the road, you don't see this for a long time. In 1988, the tax was 7.51%. No, I think that might be wrong. I think that's a typo, but we'll just say that's okay. And to maximum income of $45,000. If she earned $51,211, she's not paying on the whole $51,211. So we take that $51,211 and we subtract $45,000. She's not paying on $62,100. $6,211. Okay. Now she is going to pay on just $45,000 So that's what she pays on. Yeah, so since this was the max, this is the maximum that she'll get taxed on. And so she's paying $3,379. And then throughout the year, right, you get taxed every single month. And then what happens is once she hit 45,000, let's see, 51,000 divided by 51,211 divided by 12 gave her $4,268 a month roughly. So she paid Social Security taxes through November, like through halfway of November, because it's 10.5 here. So if she got paid every 2 weeks, let's say, or bi-monthly, or semi-monthly, I mean, she paid Social Security taxes up until her second paycheck in November, because at that point she'd have hit her 45,000. So that last check in November and then all of December, she wouldn't have paid any Social Security taxes because she would have hit this maximum. Does that make sense?